Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Alright, guys. Well, it is Tuesday. I'm expecting it to still be relatively quiet here today, but let's do a rundown through everything, see where we're at. Over to the charts. All right, so the treasuries within yesterday's range. Yesterday was a relatively quiet day. We did have some upside flows, but nothing too crazy. S&P 500 is marginally higher this morning. Oil is starting to develop a little bit of a downtrend. They can't seem to breach 85, at least not at the moment. Gold and silver also coming back after having such a good day, like, what, 2 days ago? That is a little curious. I'm not quite sure what is with that. Silver's doing a little bit better. Copper, yeah, it's in a consolidation pattern right now. The Japanese yen, okay, so the yen was looking pretty good, and now it's kind of going a little bit sideways, and the dollar is very much following it. Also, it seems like that the yen is being pretty dominant in treasury action right now from what I can tell. And then you got Bitcoin. Bitcoin's still reeling from that downturn that they had around the 4th of July holiday. So, coming back over here, let's take some notes. Today. What was it? Today is the 8th, right? Oh, it's the 9th. So yesterday was the 8th. Oh, 8. Oops. Okay, so. Oh, yes, that's right. That's right. Powell testimony in front of Congress. 52-week bill auction. 3-year auction. Bar speaking. I don't know if we really got anything else today, though. Let's just leave it there for now. So that means tight action until Powell with strong possibility of wild flows off comments. I think that what he says to Congress today could be relatively major comments that the market reads a lot into. So I guess we'll just see where it goes. Okay, now I gotta test something. I don't want to show it to you, so I'm just gonna show the camera here for a little bit, all right? Oh, okay. I have to. Okay. And now I'm gonna eat a little bit of food. Just a little bit of food. All right, well, browsing around, first thing that I see, Goldman's head of research crucifies the AI bubble. Not one transformative application has been found. Is there too much spending on AI and too little benefit? While the Goldman note, if not its head of research, who comes about as pessimistic on the topic as possible, does not provide a definitive answer, and why would it seek to burst a bubble that will result in millions in mergers and acquisitions, IPO, and no, the people that do that stuff don't know anything about that and don't care. It does share a handful of interviews with pundits on both sides of the aisle, but more importantly, it does assert that there is virtually nothing to show in terms of actual tangible benefits on the $1 trillion that tech giants are set to spend on AI capex in the coming years. Worse, Goldman's head of equity research is downright apocalyptic on what the current AI bubble will lead to. Think .com bubble on steroids. Here's how Goldman's Allison Nathan, author of the bi-weekly Top of Mind Note, frames the prevailing AI dynamic. The promise of generative AI technology to transform companies, industries, and societies continues to be touted, leading tech giants, other companies, and utilities to spend an estimated $1 trillion on capex in the coming years, including significant investments in data centers, chips, other AI infrastructure, and the power grid. But this spending has little to show for it so far beyond reports of efficiency gains among developers, and even the stock of the company reaping the most benefits to date, NVIDIA, has sharply corrected. We ask industry and economy specialists whether this large spend will ever pay off in terms of AI benefits and returns, and explore the implications for economies, companies, and markets if it does or if it doesn't. Shocking, right? Yeah. You know what? You'd like this whole thing about reports of efficiency gains among developers. It does not really help me. First of all of the things that AI would be really good at doing to help me with my job, like helping me pour through large amounts of data and find things in them and so forth, these GPT models aren't very good at, because they're not good with live data. It's really like baking data into something through the training. So, you couldn't train it to look at live data, but the models and so forth that are out there aren't really very good at doing, at incorporating that. And then on top of that, the number of wrong directions that it gives people is just insane. I could see if you're a beginning developer, it could be really useful. I could see if you're building a new application, that could be really useful. But when you're working on legacy applications that are already really complicated, the GPT is just not that useful. And if anything, it leads you down rabbit holes that are false and wrong and wastes your time. So I'm a little bit skeptical about where it's going. I still think, when I think about the future, what I see for the future is a world where supply is increasing parabolic, just like infinite supply, and the price of everything plummeting. So there are so many things where the price of these things are so cheap, relatively speaking now. It's happening in a lot of industries already where things are dirt cheap, and you're just gonna slowly see it spread. I think that the longer term force out there is still deflationary, and we've just had a temporary reprieve from that because of the pandemic and governments being stupid. But in the long run, it will be deflation. And that will be a crazy world, right? When everything that can be manufactured is manufactured by 3D printing, and it just costs nothing to make. It's going to be a different world, guys. Especially when they get that to housing. You're going to have more people living on a fixed income than ever before. And there will be a large portion of the population that won't have to work a lot. I think online customer service, no. Because if you use a chatbot for your customer service, and now all of a sudden you're on the hook for everything that the chatbot says, and the chatbot will say stupid things. So at the end of the day, you still have to have a person sitting there, being careful, watching what it says to ensure that it doesn't tell customers something incorrect. Do you remember that story when the chatbot told somebody that they could get their refund? Like it was like a bereavement sort of deal, and you get discounted tickets, but it told them that they could get the discounted tickets after, which was not their policy, and then the court forced them to pay out what the chatbot said. Like you can train it on your policy, but the chatbots hallucinate. They just make stuff up. They make stuff up. They say incorrect things. And it is a huge risk to your company to just send your customers what a chatbot has generated without any kind of review or filtering. and on top of that, when you're talking about customer service, right? Like typically customer service is when like things don't work correctly, right? So those are going to be the situations that the chatbot is the worst at, right? Like a chatbot could be great at like, a fact sort of a thing, but we always thought computers would be logical and factual. Now we have built robots that are opinionated and factually wrong. Oops. Well, I don't know if they're opinionated, but I mean, it's interesting because they work the way that we work, and humans are not logical, really. What we're doing is we're using these machine learning networks to kind of piece together things that we've picked up and learned over our years and remixing it and spitting it out. Now, we also have these logical kind of systems to help us ensure that what we're saying is correct and factual and all of those sorts of things. But at the end of the day, you are... So I saw a really good example of this yesterday. It was like Donald Trump's policy platform. Like, what is Donald Trump going to do in his platform? And Reddit was making fun of it because they said that it was juvenile. That it was like they just took everything that people are talking about and then promising to fix it and putting it in a platform. Like, one of the things that he had in his platform, or that he has rather, in his platform is end inflation. Okay, well, to Reddit, you think, how are you going to end inflation? Like, there's always going to be the 2% inflation. Like, that's the way that the economy works. But from like a ChatGPT kind of way of doing things, like, people are concerned about inflation. They want to not have to deal with inflation anymore. Saying end inflation is a way of saying that really catches people's attention and makes them feel good about that. I won't have to worry about this anymore. We're going to end inflation, right? So for a campaign tactic, it's actually brilliant. Like, the wording of everything is brilliant. The topics that they're covering, it's perfect. It's everything that people are concerned about laid out in a platform in a way that is like going to catch their attention the most. And if you're trying to think about it logically, like, how are you going to accomplish those things? And then, yeah, you're going to run into problems. But that's the thing, is that that's not how people work. And especially, non-engaged, middle of the road voters that are still persuadable, that's definitely not how they work, right? Because we are kind of like these machine learning networks, and a lot of this kind of like things that some people would call word salad. I think the word salad is just like when your chat GPT in your mind just spits out complete nonsense. Okay, like Kamala Harris spits out word salad a lot. So what the heck was she even trying to say? Makes zero sense. But there are a lot of things that are just like they're like hacking you. They know that your brain gives more weight to certain words and phrases, and so it abuses those. So like to say end is a big deal. That means that like that's the end. It's final. Nothing will change after that. So that's an important piece of information for you to remember is if it says end something, right? They're hacking the way that your brain works, taking advantage of the fact that your neural network gives more importance to that word. It's really weird, interesting how it works. Right. I think once you understand the way that people think, so many things in the world and like how to do things make a lot more sense. It's not me. It's not the natural way for me to do things. What can be unburdened by what has been. Yeah. Well, I think one of the things that's going on right now is that, literally everything that all of the information and narratives and stuff that you are fed is there, like it's training data, it's programming your mind in some manner or another. And there are people that have been programmed by this, radical woke ideology sort of a thing to react to and be triggered by certain language and so forth. And the problem with this ideology is that they kind of understand this thing about people a little bit too well. They're not there to be like, this is the most logical thing or this is the best thing for people. They're in many respects trying to program people to do something that is not in their best interest so that it will be in the best interest of a minority group, essentially, right? And so when you see these people that have been programmed by that try and regurgitate it back out, it makes zero sense at all. Even if you understand the woke ideology, even if you have the correct context. Because in the end, it's a nonsensical ideology that is primarily to obtain power. It's basically like people look at, what do I do on social media, or how do I say things on YouTube that will get me the most viewers, sort of a thing, and then like built up a political philosophy using those tactics to try and get people to vote against their interests. It just makes no sense when those people that have been programmed with it repeat it back out. And so then you get these politicians who, they're just going along with it. Like whatever the far left of their party is saying, like they think that must be the right thing. That's the way that I should be going. And so they never believed this sort of thing, not originally. They're just trying to go along with it because that's the popular thing in the party. And then that's where you get stuff like Kamala Harris, where she just says things that are just really bizarre. What can be unburdened by what has been, right? Which is really where it comes from, is this whole idea that the United States was racist in its inception and needs to be completely remade in order to eliminate that racism inherent in the system. That's why she says that, right? Well, but too, the thing about AI there's another issue that I see with AI. Okay, so like there's chatbots. Okay, cool. I really don't think that there's been that much efficiency or change from chatbots. Companies are investing in AI in general, though, right? They're investing in infrastructure, they're investing in computing power, they're investing in power and making these huge data centers so that they can do all of this machine learning stuff, right? Well, the bottleneck in utilizing artificial intelligence in the future is not the infrastructure, or rather it is not having enough computing power and all of that sort of a thing. I mean, yeah, it is an issue if you haven't built any of it out. But like if you're a small startup company or something like that, you know, you just go and get the resources created by Amazon Web Services that are specifically for AI, or Azure is really, really good at this sort of stuff. And you can get that compute, and you can get as much as you need as a small business. Okay. So you can get what you need. The issue is getting the data into the right format and training the model on that data and getting the model to do what you want. Data infrastructure is not easy. It is a huge burden. Not very many people know how to do it. Most companies never get to the point where they're actually training the AI because they can't get their data pipelines correct. And I don't see anybody investing in that. In that weird. You know, like the words that I think that Wall Street should be like paying attention to are things like parquet and like these new columnar data formats and things like that. But what has happened is Sam Altman and OpenAI have collectively fooled us. Let us down a rabbit hole that's to their benefit. There probably will be a large correction in AI, just like the .com bubble, just like the .com bubble. I think it's highly likely. And I really, really doubt. Well, they say that Nvidia has come back though. Is it really? Has it really? I don't know. It's been like a week. Some of y'all, you look at Nvidia every day. That's not me. Well, it looks like Chewy is kind of chilled out after that whole episode. Look at GameStop real quick. Oh, GameStop is just like dead now. But it's still at 25. That's not bad. But we want Nvidia. Okay. So it came from 140 to 130. That's not that big of a pullback. That's not that big of a pullback. I don't know. If they get back to 100, then I might kind of be like, okay. What's going on here? You're working a baby size long? I find it really curious, Octavius, that you always take the trades, even in like some of the slowest action. Because my take is that this market is not likely to go much of anywhere until after the Federal Reserve, until after Powell speaks to Congress. Oh boy, I wonder what kind of craziness we'll get from Congress. I'm sure Elizabeth Warren will put on a good show for us again. I think I'm a little bit too opinionated and cynical today, aren't I? Nah, maybe I'm a little tired. Last night I had an alert go off in the middle of the night, and you know my phone's for those critical alerts. It makes the sound, it overrides everything so that I don't miss it. Yeah, it woke me up, and I tell you what. Like just being woken up in the middle of the like at 3 a.m. like that really like in the middle of your dreams and stuff messes you up. Messes you up a little bit. Well, I guess was checking to see if anybody had said anything about it, but not yet. They probably haven't come in yet. I was not the first person in the chain, so no wonder the other people that were above me in the chain last night, what they end up saying. Maybe Joe Biden can call you on the stream. That way. So did you hear that they're going to have a big boy press conference now? I don't know, man. Okay, theory. Here's my theory. My theory is that they did try to pump Joe Biden up on drugs. They gave him Adderall, and the problem is that they said, well, the half-life, it takes about 30 minutes to get started. So they gave it to him 30 minutes before the thing. No. Because it can take much longer than that to really get into like its full strength and for it to really help you. Like I'm usually not to this point if you listen to how I talk and how I'm able to like just go into sentences and keep going, or when I'm reading, able to read and correct what the mistakes are in what I'm reading and everything and just keep going without a pause. Like I just did right there. Usually not able to do that until the top of the hour because I take the medication at like 6:15 and it takes more like 45 minutes to like 30 minutes is when it kicks in. It takes much longer than that to really get going, and it depends on the person. So you give it to Joe Biden, he probably wasn't really feeling it until like an hour into the debate when he was getting like really mad at Trump, right? Because he was animated at points, right? But before that, word salad, losing his train of thought, etc., etc. Okay, so they did that. They figured out their mistake. So now they can trot him back out in public because they have to, right? Give him enough drugs. They just got to give it to him earlier. So we can have the big boy press conference. We can have another. I tell you what, man. This whole thing is just so crazy because I really do not see how Joe Biden can survive. Like Joe Biden wins. There's some really crazy stuff would have to have happened for Joe Biden to win. And right now, the only thing that anybody cares about is, at least on the Democrat side, is that he can't beat Trump. They don't care about that they lied to us for literally 2 years. Not just lied to us, gaslit us. Oh, all those people telling you that Joe Biden is not mentally competent. They're lying. They're using cheap fakes. They were literally gaslighting us. Telling us that those of us that thought that Joe Biden was not competent are just not seeing reality correctly. They don't care about that. They don't care that they lied to us. They don't care that having an executive that is impaired is a huge national security risk. Okay, the president is a single position because you need to have a single executive to make decisions. Having a war cabinet that's like makes decisions by committee and so forth tends to be a disaster. This idea that, oh, well, we don't actually really need a real president. It's just his staff that really matters. There was one guy, was it Chris Matthews, arguing that, oh, for the debate, we should have like the staff, the cabinet up on stage too, and let them answer questions if they want. Absolutely crazy. Okay. And they don't care that Joe Biden's policies have just been really bad for America and that the last 4 years have not been very productive. No, they only care that he won't beat Joe Biden. He won't beat Donald Trump. And the thing is you can't force him out. Like, with all of the rules as they are set right now, if Joe Biden is determined to stay in the race, I don't really think you can kick him out. Unless Kamala Harris is willing to invoke the 25th Amendment, or not 25th Amendment, but basically declare the president mentally incompetent. Her and all of the staff do it and usurp it, essentially. Yeah, I don't really see that happening. How long does the pill last? 4 to 6 hours. So usually by the time I am like an hour after the stream is when I crash. But I'm taking such a small amount that I don't really get the crash. He will leave for the right amount of Jell-O. Well, I tell you what, conspiracy theory, the internet has been all abuzz about all sorts of things. They're saying that right now they're just negotiating, right? That they have to give Biden enough money and then he'll leave and that sort of a thing. Maybe. I mean, I wouldn't be privy to that sort of information, so how would I know? All I know is that they probably can't force him out. I am just glad that even the stupid are starting to see now, so maybe we have real hope as a country again. Yeah, I don't know, man. Like, so now everybody sees that Joe Biden is mentally competent, or incompetent, rather. I don't think there were very many people that really thought that he was that sharp. Right. Just people trying to gaslight us. It's like one of those things where it's a lie and everybody knows that it's a lie, but it's still effective. You know? So it's that sort of a thing. But, yeah. You know, so those people aren't going to step in and say, oh, what else are they lying to me about? Right? What else is it that I believe about the way that things are going that maybe I should take a step back? Maybe this mass influx of immigration is not actually in my best interests. That's the one that bothers me the most. Maybe I'm just thinking about it right now because there was that whole thing in Europe and so forth. And, you know, people, they've been making that argument like it's good for the economy. Well, it is good for the economy, but it's not good for you. It's good for business owners and people that own businesses. But for you people that are working, it dilutes your labor. They are basically building the economy at your expense. And somehow they've convinced everybody that it's in their best interest. That's insane to me. It's just basic economics. You increase the amount of something. If all other things being equal, if you increase the supply of something, price will go down. You add more labor, the value of your labor is going to go down. And then you say things like, oh, well, people should be able to have a living wage, except that's not how we base prices. It's based on supply and demand. If a certain thing, certain job is not making a livable wage, it's not because you didn't pass enough regulations. It's because there's too much of that supply. Relative to the demand, that is. What's the market waiting for? No, they're waiting for the Federal Reserve, chairman of the Federal Reserve testifying to Congress. Okay, have you tried I have not tried the time tirated one. I'm on a norepinephrine reuptake inhibitor, which is pretty much active all the time, but that has limited in impact. It's like I have much better control over my emotions on the reuptake inhibitor, and that was like the biggest deal for me. And but it doesn't really help me with like staying on task, and in particular getting started on a task. Like usually once I get started on a task, I can just keep going, right? Before it was not. I can't even imagine how I got anything done. Now I can be hyper productive because, you know, I have the medication and I have this whole system built around me to help me be productive. So I can go into hyper productivity. Not all the time. I can't be in that all the time, but I can push it, right? And so I take the Adderall because that gives me that extra little bit of motivation and so forth to get me started on tasks and so forth. But it doesn't take me very much. So what are the symptoms to know if somebody took it? Well, so if somebody has ADHD and they've taken it, you're not necessarily going to notice because essentially they will be like a normal person, right? But if they're a person that you know and you see all the time, you will be able to tell a difference. You might, you know, like an untrained person might not notice, but if you're looking for it, you'll be able to notice. So the thing that you'll be able to notice in me is that my ability to hold a train of thought and to articulate what I'm thinking is significantly better. I will have way less pauses in what I say. I'll use bigger words. I don't spend as much time searching for words. Those are the things that you will notice in me right away. There will also be much more of a focus. Like, I call it, you become a killer, right? It's just like, you have a job to do and you want to get it done and nothing's going to stop you. That's what I think ADHD medication does to me. Kind of blunts your emotions. It's just like, you know, in World War II, the Germans would give their soldiers amphetamines, right? And it was because it would allow them to keep going and it would allow them to do their jobs and carry them out without remorse. Right? Turns you into a killer. Not that you're actually going to kill people, but I mean, you get the job done. You got this killer instinct to just go and get things done, right? Now, if they're on too much, you might notice some tension. They will be a little nervous. They will, they might have muscle spasms, things like that. Another thing is, I say that there's like a killer instinct to it, but there's also like, it makes you optimistic, right? Like probably the first 30 minutes here have been really pessimistic, and now the rest of the stream will probably be really optimistic about everything, right? Can you go 3? Heck no. Dude, if I just have a disruption in my sleep of just like 30 minutes, I'm like practically useless the next day. At least that's how I feel. And I guess I would say I think it affects my sleep. I remember as a kid having a very, very difficult time falling asleep. But I don't have that problem anymore. My sons seem to have a really hard time falling asleep. And I'll go into cycles and stuff too. Like, you just get to go into this cycle where it's like there's certain chemicals that you're not getting. There's not enough dopamine and oxytocin in you, and so you start seeking people out. You want to go cuddle and whatnot. You kind of will go in this cycle, and then there's like a point where you're feeling good. You got all the nutrition that you need and everything, and you almost feel euphoric. So there's cycles to it. Well, noticing a little bit of a rise in oil here. I don't know if it's really significant, but oil, gold is also moving, but the treasuries are just flat. And this may be because of the dollar, because the dollar's seeing a little bit of movement as well. Yeah, I'm thinking the market will jump. I don't expect too much until Powell. But perhaps if there were going to be moves, I think you'd be more likely to see moves in the commodities rather than the treasuries and ES, right? Because the commodities are going to be a lot less influenced by what Powell says. They probably will still be influenced by what Powell says, but I could see where some people would be like, you know, in those markets, they still have to get their business done. Who knows? I'm not sure what's driving oil at the moment, though. So we'll just see. All of that off of, I think that they are pumping Biden full of drugs, and they just think that they have how to do it better. So now we can have a big boy press conference. But you know what? Joe Biden has done like what, 2 interviews? And they've been disasters. They've been disasters. Mark my words. If Joe Biden doesn't drop out, the Democrat Party will be punished like never before. It'll be like Ronald Reagan level victory. The second time that Ronald Reagan ran, it was like he got like 80% of the vote or something crazy like that. It'll be almost on that level. You cannot lie to the public like this, put us all at risk, all for the sake of your own lust for power. The electorate cannot allow that sort of thing. If you allow people to do that, and then you still vote for them, then that just means, oh, I can do whatever I want because I'm the only alternative. Or rather, there is no alternative. So I think a lot of voters will realize this and will punish the Democrat Party if they're not able to dump Joe Biden. If they're able to dump Joe Biden, have an actual quick primary, maybe they can salvage it and avoid most of the pain. Just browsing around a little bit. Oh, hey, we got a new one. Okay, hold on a second. I wanted to test something here. Try it again. Aha. Somebody wanted me to look at that what do we call it? Volatility projected range indicator. And so we've been given temporary access to data. Let's add it on here and see if we get everything working correctly. Oh, yeah. Oh, yeah. So now let's see with some days in the past, recent past. Yeah. Looks like it's still a pretty effective setup. Although I would say that the inside range that you get here is a little bit bigger than I would think. And what is the value that it's using? It's using 16, isn't it? Displacement. Oh yeah, factor 16. So I think you can also use 20. I think 20 is what is like traditionally. Oh, you know what? Actually, let's do it like this. Do it like this. Let's add it twice. That's 16. Sure. There we go. Yeah, the difference between them, I think, is small enough that it doesn't really matter. I think the 16 is working a little bit better right now, but... Hal says, I think yields go up. Why do you think that? Well, I've never seen it so dead. It's literally like 4 ticks in the last hour. Maybe there is some signs of order flows being slightly biased to the long. But only slightly. All right. Wonder if I have the little thing that generates the... I think I made something once that like plotted it XY, but I don't remember what happened. I think I gave up on it. Let's go searching our old computer and see if we get the thing, and we can make a new actually, well, I don't know. I'm just gonna search through here first to see if I can. Nope, I don't see it. Maybe it's in the stats. No. Maybe I need to remake that. Well, we have the old stats, though. Where's the old stats? All right, I think I got what I want. Oh, good, I'm finally back. Finally back, like back from vacation completely, or just... Morning Uzi to you too. I thought that I started to make an indicator that was like an XY sort of a thing. And I don't see it anymore. Maybe I didn't do it. Maybe I just thought about it, or I started and I didn't finish. I don't know. Is it in alpha? Nope, it's not in alpha. Have to resort this stuff this morning. Well, we were having a little bit of a bull run, but they've collapsed back really quickly here. Let's see here. When does Powell speak? The top of the hour. Oh, but I think that we may get his comments early, so... How stuff had to run to the DMV, restock groceries, and like get it all done. Oh yeah, jeez, yeah. Well, good. It reminds me, like, so you probably don't have this problem, but like when you're doing a home project and you have to go to the hardware store like 20 times. Ugh. and you're just like back and forth, back and forth. They're like, you're not spending a lot of time thinking, but it's like a different kind of stress. I used to have that problem, right? Yeah. And then you learn enough and you get enough things that you have everything that you need here. What the hell is triangle path geometry? Oh, I do not know what this is. It actually draws like real stuff on the chart. Let's pull that up, man. Oh, did I already close my other window? That's funny. Oh, I would have to copy it over to use it over here. I don't know if I actually want to do that. But holy crap, I'd take Michigan summers over our 70 degrees until mid-afternoon. Yeah, right? Like, I don't think that people... the majority of the population lives in an area where it doesn't actually get that hot in the summer. Like, it usually doesn't get above 90. Which is not that bad. And that's where the majority of the population lives. And they don't realize how bad it gets down in Texas and Florida and the South. And then in the West it gets dry hot. Oh my gosh, it gets dry hot. I'm kind of curious about this triangle path geometry thing, but I'll leave it alone for a bit. This is the stats. Okay. Well, now I'm kind of tempted to just like draw it right now. I must not have actually done it. So maybe I should totally spend all the time to do it today. Okay, hold on. Yeah, I'm having some issues with the heat right now because we're building this dog kennel cabinet sort of a thing. And I don't want it to warp. I don't want it to warp. And you know, it's so hot and I do my workout in my garage. And so to cool down, I have a big swamp cooler. But if I use the swamp cooler, that's moisture in the air. That causes the wood to warp. So I can like only use my fans and it's killing me. And so I'm trying to get that done as fast as possible. And I just keep running into like little roadblocks. Like I think that after having done it once, I could probably make another one again and be really fast and do it all in one day. It would probably take me all day, but I could probably do it all in one day. But right now, it is not that. So, and I'm making all these little things. Like one of the things was it has like bars in it. And I did the bars, and I did it with wooden dowels, 3/8 inch wooden dowels, or 3/8 diameter wooden dowels. And I realized that the kids were almost certain to break those. So I went and I bought aluminum rods. Bought aluminum rods. And then I kind of had to cut the aluminum rods down to the size that I wanted. I probably could have had them do it, but I wasn't that smart. So I had to cut them down. And then I found that the angle grinder that I had was not very good at cutting aluminum. So I tried changing the head on it, and it just wouldn't come off. I couldn't change the head. Your typical wrench for that doesn't fit into that particular one for some bizarre reason. So I go and I buy a new angle grinder and a disc. And then it turns out that only uses a Type 27 disc. So I have to go back and get a different disc. And that disc didn't cover that disc wasn't thick enough, but I made it work. And then the battery doesn't last very long. Battery didn't last very long. So I wasn't even able to finish cutting them all. And I'm going to have to go back and clean it all up because it left all sorts of little jaggy things on the end. So yeah. And then another thing was that it's pocket holes, right? You use pocket holes because like they're easy and they're hard to screw up. But I screwed them up because I didn't know the correct way to I didn't realize that all of the gauges on my little pocket hole jig thing is based on the wood that I'm starting from and not the wood that I'm going into. So I made some mistakes there and had to like drill extra holes, and so now there's like holes all over in it. I'm gonna fill those. I'm doing all this stuff like I want to fill all those holes now, but then I don't think that there's a way for me to do it without there being holes somewhere. So yeah. I would like to have it be done and like start painting it this weekend, but I don't think that's gonna happen. Okay, let's do this indicator, man. Let's do this. So I think that I want to take the stats range histogram. Oh wait, that's wrong. Okay. SBS. What do we call it? When you have an XY plot. So do we just call it an XY plot? Or is it a scatter plot? Scatter plot. Let's call it scatter plot. Public list of double comma double values equals new list. Can I do that? Let's see if that compiles. No, it's not. Let's try that. List of double 2. Do it like that. No. Array size cannot be specified in a variable declaration. Okay. Okay, so then we say, where are we going to pull from? Gonna have implied volatility and realized volatility. And then do we have one of these things down here? Yeah. You can get one of these. Also, we will have a Ninja script property public int factor get set factor equals 16. Implied. Realized. Realized equals. Should we just, well, I don't think I need to do too much on here. So we're just going to do this on daily bars, I think, and say realized equals highs of 0 minus lows of 0. So realized is just the day's range, right? And then for this part, hold on, I don't want to. Oh, I guess I have to add this other one up here, huh? Figure. Okay, so I have to add that. Actually, you can see this good. This is not that big of a deal. Volatility index. Implied of 0 equals open price times 1 plus %. Okay. Oh, why do I have it like realized, implied, 0, and I have like this list, and I don't even need this list. Over optimizing. Okay. Now we can come into this sort of stuff. Okay. 4. And then how do we do this for every bar? How about in our bar types, or not bar types, chart styles in our optimized candlestick? What am I using there? I don't know if I need all of this, but I'll just, and that's right here. Oh, actually, you know what? I kind of do, well, Can I do the max of this series and a min of that series and do the whole series? I'll see you here in a second. Raw point. I don't think that I need any of this stuff. I just need X, comma Y, or something like that. No, we don't want this. For int I equals 0, comma, I is less than current bar, I plus plus. What are these semicolons? Draw point I think. Okay, so now I need to do a little research here. SPY boring. I know. Spy is boring. I'm probably boring right now. I apologize. Okay. Public double max value, public double min value equals double dot min value equals double dot max value. Okay. And then in here on the on bar update. Oh my God. I'm doing it again. I'm being stupid. Not changing it in the right place. Can you explain multi-threading and single threading in NinjaTrader? No. So to answer that question, I would need to know a lot more about the specific issue that you're dealing with. NinjaTrader is basically a multi-threaded application, and there are certain situations where it's relevant. And what you have to do based on that is kind of, I don't know. Let's do this. Min value equals math.min of min value, comma, implied of 0. Okay, we will get text at the start. When I run an automated strategy, it freezes. Okay. So are you utilizing some sub indicator in your strategy? Are you utilizing anything other than the like on bar update method? Because if you're like keeping everything to the on bar update, the multi-threading stuff typically doesn't come into play. So when you start doing things with like on data, on depth, on market depth, or on market data, those are where it starts to come into play. Min, max, min, max, implied, realized. Okay. Oh, no, wait. What am I doing? I don't think that any of that stuff is relevant here. He uses volume profile for the strategy and the nodes in volume profiles. Okay, that still probably now are using NinjaTrader's volume profile, because trying to use NinjaTrader's volume profile wouldn't really help you a whole lot because you can't access any of the cool values. What is this one? Okay, oh, sorry. There we go. Okay. So let's read what we're getting here. Elevated inflation is not the only risk we face. It does sound like the market is reading it as mildly dovish. Manit Puri, good morning. I don't see anything too well. I did hear some big things, but I'm having a hard time parsing it all. Okay, Powell, we continue to make decisions meeting by meeting in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years. Elevated inflation is not the only risk we face. Committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably towards 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably towards 2%. In other words, if the data continues to come in the way that it has been, we will cut rates in August. Okay. Well, we can pull up C-SPAN if you want. Actually, I'm not seeing it on C-SPAN yet. Oh, I guess it hasn't started yet. We just get the thing, but they haven't started testifying. Okay, so there was a good pop at the beginning, but that's retraced. think that this is actually max value minus min value. How can one detect meta orders getting filled? Well, it doesn't matter that it's a meta order. It matters just the total amount of volume that's going through there, right? If too much volume trades in a specific area, it will exhaust the liquidity in that location and create the liquidity hole. Or if the liquidity pulls in that area, that can also just create a liquidity hole on its own, right? So if I'm seeing trading and it just like completely skips over a price, you know, like it's trading and then all of the volume pulls at a certain price and nothing trades there and it skips down to the next price. Very rare, but it does happen in the S&P 500. It happens. That tends to create a liquidity hole. You're trading up and there's a really, really huge iceberg at some spot. Tends to create a liquidity hole. We just range in a spot for a really long time, tends to create a liquidity hole. Okay, they are like selling like cray now. And I am, oh, okay, wait. This is the market reacting to the
families can afford to buy a home. Higher interest rates are making our country's housing supply shortage worse, not better. We need more housing construction of all types. Higher rates lead to the opposite, and particularly make it harder for multifamily construction to work financially. Higher interest rates make borrowing more expensive for working families, whether it's for a mortgage or a car or anything else. Most people don't have the luxury of paying for everything in cash. And for the millions of Americans feeling their budgets stretched by higher prices, taking on credit card debt to pay for groceries and other essentials has become an option of last resort. But as more people struggle to pay down their debts, credit card interest rates are reaching all-time highs. Last month, Director Chopra testified in front of this committee and explicitly stated that credit card issuers are charging higher rates far beyond what they need to cover their costs. Corporate greed rearing its head again. Banks are making record.
I'm having a hard time thinking how I
the Fed keeps rates
deal with the max and min values here.
Cost Americans money by making it more expensive to buy a house and to borrow money. Higher borrowing costs stifle future economic growth, leading to fewer homes being built, leading to businesses making fewer investments in the economy, and eventually, if the Fed doesn't stop, leading to workers losing their jobs. As they set economic policy, I urge the Fed to weigh these trade-offs and remember whose jobs and futures are at stake. It's why I've worked with my colleagues to hold corporations accountable and will continue to do that. For instance, we fought to cap insulin prices for senior citizens. We'll continue to fight to extend this price cap on life-saving drugs for all Americans. And why my colleagues and I on this committee are working, it's why we're working to lower housing costs for more Americans. The Fed also continues its work to keep the banking system stable and ensure consumers' money is safe. Last year, the Fed and other bank regulators issued a proposal to update bank capital requirements, strong capital standards, and you've heard in this committee overwhelming support for strong capital standards. They're critical for the economy. It's our way of making sure that if Wall Street bets go poorly, which they often do, investors, executives, and shareholders should pay for it, not taxpayers. The biggest banks have spent obscene amounts of money attacking this Fed proposal. But you, the Fed, don't work for big banks. You work for the American people. Your concern should be developing capital rules that protect Americans' money, not protect bank CEOs' stock portfolios. The Fed needs to look past these shameless lobbying efforts and finalize a rule in the best interest of taxpayers. Another dangerous piece of the Wall Street business model that makes our banking system less safe is incentive-based compensation. This compensation model rewards risky behavior that enriches Wall Street executives in the short term, but makes banks more likely to fail. We saw the results of that model in 2008. We saw it again last year with the failure of Silicon Valley Bank and Signature. Other regulators have moved.
So this is why I hate this
reckless and
testimony, is the market will react to the way that the Senate, these people are talking, even though it doesn't really mean anything.
This rule's long.
So they don't like what Sherrod Brown is saying, I think.
Effort as soon as possible.
Whatever.
Fed also has the important job of reviewing mergers and acquisitions between and among banks. Over the last several decades, we've seen the largest banks grow into massive, literally trillion-dollar companies, while thousands of small banks in rural communities in Northwest and Southeast Ohio, in small towns in those communities, in those areas, and all across America have disappeared. Consumers have lost trusted local banks. Small businesses have lost longtime reliable banking partners. Regulators like the Fed have the crucial job of guarding against mergers that reduce or eliminate competition and lead to bank closures or layoffs. I recently sent comment letters to the OCC and the FDIC on their current efforts. I expect the Fed to take the proper steps to ensure that its merger review process is robust and that it protects consumers and communities. Finally, Mr. Chair, you must ensure the Fed has high ethical standards. Fed officials should never again be able to profit from their positions by using confidential plans about Fed monetary policy and emergency programs to pad their investment portfolios. The board's latest update to its trading rules is simply not good enough. It still fails to establish the clear penalties needed for Federal Reserve officials who make investments in violation of the public trust. A rule with no consequences is really not much of a rule at all. The American people need to be able to trust that the Federal Reserve works for them in a time of deep cynicism that people have about the federal government overall. The American people need to know that officials aren't abusing their positions for personal gain. As chair, you have an important role to play to make sure our economy works for everyone, not just for Wall Street. The Fed's regional banks must do their part to hear from people and other stakeholders in their 12 districts to understand their needs. I look forward to hearing today how the Fed will balance its dual mandate, how it will protect Americans' money, how it will foster an economy that upholds the dignity of work. Senator Scott.
Thank you, Mr. Chairman. Thank you, Chair Powell, for being with us this morning. Welcome back. Joe Biden broke this economy, and it's been very difficult to fix it. That's the bottom line. I want to start with the end in mind. Joe Biden broke our economy, and it is very difficult for anyone to fix it. Everyday families are struggling to put food on the table. Real wage growth is being eaten away by rising prices and runaway inflation. Think about the fact that for 52 consecutive weeks under Joe Biden, wages were eclipsed by inflation for 52 consecutive paychecks. I remember back in December 2020, in South Carolina, gas was $1.99 per gallon. Today, it's still...
When I start thinking about this, my brain just goes, everything goes everywhere, and I can't. I know how to do this, but have you ever built a trading bot? I've done many bots with varying success, but nothing super great.
In a single parent household mired in poverty, when you see...
I have a lot of content on the channel where you can learn how to make trading robots in NinjaTrader 8.
Keeping your house cool.
But I'm working on a more advanced one.
25%. It's not a challenge. It's not unfortunate. It's an absolute crisis. And too many households in America today are living paycheck to paycheck, and they fear the challenges that are coming our way, the headwinds brought to us by the Biden administration. Those headwinds, of course, are seen through the prism of inflation. Inflation hasn't been this high since the Jimmy Carter years, and that devastation is being felt and measured in households by too much month at the end of the money. And that devastation is real for the vast majority of Americans. And the pointing finger, I tell you what, whether it's the Biden administration throwing the Fed under the bus or any other way they can deflect from the real problem. I've seen it, committee hearing after committee hearing after committee hearing. My friends on the left want to point their fingers at anyone other than the real culprits at 1600 Pennsylvania Avenue. Progressive wish lists, spending projects, and out-of-control regulations of this administration continues to eat away at American paychecks. And they continue to blame, whether it's shrinkflation, greedflation, skipflation. They're looking for someone to blame except for Bidenflation. The devastation of Joe Biden's economic policy continues to impact everyday Americans. The American people see through the facades and they want real solutions. It doesn't take a PhD economist to understand what the average American is experiencing under this administration. When President Biden and my Democratic colleagues pump trillions of dollars into our economy, those dollars increase the demand and pushes prices higher. It's that simple. The American people see and feel it every single time. And they see it, as I said earlier, the grocery stores, the gas stations, at the doctor's office. It's just undeniable the impact that this is happening. Just last week, we celebrated the birth of our country, the birth of this notion of freedom and liberty. But American families got slapped with the most expensive July 4th on record, with a cookout this year costing, on average, 30% more than it did just a few years ago. I call that hogwash. What's worse is that this administration doesn't want to learn a lesson in economics. Instead of reducing the push for more spending and more regulations, they only simply double down. Let's take, for example, the tens of billions of dollars of student loan forgiveness. Constant new plans to forgive more money, regardless of the constitutionality of their decisions. So it's important to ask, who are these billions of dollars of forgiveness actually benefiting? Well, the answer is simple. This forgiveness scheme will result in debt relief for 750,000 individuals from households with an average income of $300,000 or more. And just don't forget the fact that the average American family has a household income around $74,000. So what we're doing with this unconstitutional student loan forgiveness is actually asking the median household of $74,000 per household to bear the burden of forgiving debt for students.
It's funny that these idiots know they're not getting rid of that 30% increase now without doing stuff that will make them incredibly unpopular for a short
The actual
time.
cost of this, somewhere between $870 and $1 billion and $1.4 trillion. So why?
Let's see how this goes in France.
Why do we continue to punish American families struggling paycheck to paycheck with a new scheme to relieve households over $300,000 of student loan debt? Well, the answer is pretty simple. Politics. It's one way to buy vote after vote after vote for November's election. It's just hard to imagine. So while I appreciate your measured words outlining the Fed's work to cool inflation, I think it's past time we all recognize what is truly going on. Political pandering from the left. I strongly believe that our economy cannot handle any more of this wasteful spending. And if you disagree, I would love to hear your thoughts on that. But it's not just spending policies that stifle growth, it's also overregulation. And I can't.
Are you deliberately choosing not to be? I'm deliberately choosing not to be involved. It's a crapshoot.
The sidelines through Basel III Endgame.
The market overreacts to everything that these guys say, and it's always a shit show. It's not worth trading it.
Americans, their chance to own a home, start a small business, and have access to the credit and the capital necessary to make their American dreams come true. For those who are actually watching this hearing today on C-SPAN, Basel III capital requirements are like taking your star quarterback, Dak Prescott, and telling him to sit on the sidelines because he just might get injured during the season. It's just plain ridiculous. But these proposed capital requirements would just do that, forcing more money to the sidelines of the greatest economy on the planet and out of the hands of first-time home buyers, business owners, and folks trying to achieve the American dream. The stakes are high, and that is why we have to get this right. You've heard me say this a number of times, but it bears repeating. We need transparency in your rulemaking process, as this normal proposal lacks any form of clear justification. Chairman Powell, it is essential that you and your fellow governors and the other agencies join in this rulemaking, follow the law, do the homework, and then let the public check the work. And that's why I believe that it is absolutely necessary to have a complete re-proposal of Basel III Endgame. Give the stakeholders an opportunity to take a look at it and then recalibrate what is necessary going forward. Any increases in capital that are not quantitatively justified harm the American people who need it most. Our farmers, home buyers, small business owners need and deserve access to credit. Therefore, I'll repeat it one more time. You need to restore confidence in this rulemaking process, pull the existing proposal, and have a complete restart. And then, when the data has been analyzed and is available for the public scrutiny, reissue an appropriate proposed rule following the requirements of the APA. I look forward to your opening statement and having a chance to have a conversation afterwards.
Thanks, Senator Scott. Mr. Chair, welcome. Thank you for your service and for your testimony today. Please proceed.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient.
I think we can. Well, I mean, you can.
Of the U.S.
That'd be my guess.
Past year. In the labor market, a broad set of indicators.
Just realize that whatever position that you have, they can say something that can move it either way, and it will move before you're able to do anything. And you have absolutely no way of predicting what they're going to say.
At a low level of 4.1% in June. Payroll gains averaged 200.
You want to take that risk? Be my guest.
In the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54, so-called workers in their prime working years, and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 pre-pandemic level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. These goals levels, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. A restrictive monetary policy stance is helping to bring demand and supply conditions into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Federal Reserve with operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Mr. Chair. And the senior member of the committee will begin the questioning. Senator Reid.
Thank you very much, Mr. Chairman. Former President Trump has indicated that he would propose, if elected, a substantial increase in tariffs of between 10 and 60%.
Oh man, the first question he asks is about the Trump's tariff thing.
The federal income tax. First, on the question of what would be the impact of tariff increases on prices.
It's not a question that Powell wants to ask.
Thank you, Senator Reid. So I'm going to say that.
What do you mean? How do you feel about getting a bachelor's of science?
Not to comment on campaign.
It's been extremely profitable
trade policy
decision for me.
Really specific and important jobs, and we try to stick.
And I think that you get a better education getting a bachelor's of science than you do all of these kind of like.
Let me opine a bit.
Certificate programs and stuff.
Increases in tariffs is going to have an effect on prices in the shop aisle. It's going to increase them because they'll be passed on likely. 60% tariff increases are significant. And in fact, I've been told that to replace the income tax, you would have to raise tariffs across the board 70% to make up for the loss of the income tax, which would, I think, create huge economic problems. I respect your impartiality and your neutrality, but the numbers don't seem to add up to anything that would help the country.
Oops.
Let me switch to something else that might be more within your line of response.
Did he not answer it? I didn't even hear.
A better balance. And that's one of the key factors to judge whether interest rates can be raised.
Block by.
I must say I'm concerned a bit that we're not on a very faster track to increasing interest rates from the Fed. And because of the better balance you cite. Could you comment on that, Mr. Chairman?
Sure. So the most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago. This is no longer an overheated economy. This is an economy, as I mentioned in my opening remarks, that is more or less back by most measures to where it was before the pandemic. And that was a strong labor market, but it was not an overheated labor market. So I think the upshot of that really is that we're well aware that we now face two-sided risks and have for some time. But now, the labor market appears to be fully back in balance. We know that if we move too quickly, we risk unnecessarily hampering economic activity and possibly interfering with the ongoing expansion. We know that if we move too slowly, that we may undo the good we've done. Well, actually, it's the other way. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. So we're very much balancing those two risks, and that's really the essence of what we're thinking about these days.
But the direction seems to be going towards lowering interest rates at some point. We would hope that might be a wish rather than a direction.
So I think if you look at the last summary of economic projections, I guess I would say it this way: it doesn't seem likely that the next policy move would be a rate increase. We don't take things like that off the table, but that does not seem the likely direction. The likely direction does seem to be as we make more progress in inflation and as the labor market remains strong, we begin to loosen policy at the right moment.
Thank you.
Let's see how bad it is so far.
Just 2 weeks ago, the Supreme Court handed down 2 decisions that impact every federal regulatory agency, including the Federal Reserve. They overturned the Chevron case, which had eliminated judicial deference to agency decision-making for many, many decades. And they also dramatically extended the statute of limitations under the Administrative Procedure Act. What is your judgment is the cumulative effect of these decisions on the Federal Reserve? More broadly, what does it mean to the economy if virtually any regulatory decision the Fed makes can be second-guessed by a judge? What position are we in now?
So we're as an institution very focused on reading the actual letter and intent of the law and following it carefully. This is a strong institutional value that we have. Those are brand new decisions that just came down, and we're really in the process of just studying them. I don't have anything for you on them, but we will, of course, follow the law as the Supreme Court has read it, because that's their job.
Well, thank you, and I concur with compliance with the law, but when you do your analysis, and if it is detrimental to your ability to regulate the banking industry in the United States, I think you have an obligation to make that public. Thank you, Mr. Chairman.
Thank you, Senator Reid. Senator Scott from South Carolina is recognized.
Thank you, Mr. Chairman. Chair Powell, we've heard a steady stream of commentary that there will be changes to Basel III endgame proposal. That can be seen certainly as good news. Some reports say it could be finalized as soon as August. Others say you are circulating a term sheet for a revised proposal. Through it all, this proposal will have outsized impacts on our banking system, from big to regional to our U.S.-based foreign institutions, as well as impeding access to credit for consumers. So even though you yourself have said there will be broad and material changes, I believe this proposal is flawed, both in process and in substance, and should be withdrawn. Do you agree, and will you commit to withdrawing the existing proposal and issuing a new proposal with a robust notice and comment process?
Let me update everyone on the status of all that. So over the past several months, we've had, in fact, Vice Chair for Supervision Barr has held a series of discussions with the other bank regulatory agencies around potential changes to the original proposal. I'm pleased to say that we've made quite a bit of progress on those and are very close to agreeing on the substance of those changes. And I can't really be specific because nothing is agreed until everything's agreed, so I won't have a lot of specifics for you today. The question where we're continuing to try to make progress is that of process. So it is my view, it is the strongly held view of members of the board that we do need to put a revised proposal out for comment for some period. And the reason is, when there are broad and material changes, that has been our practice. We don't see a reason to deviate from that practice. It seems to be consistent with past practice and with the Administrative Procedure Act. So that's very much what we think. And we're working through that question with the FDIC and the OCC. we haven't reached agreement on that, but I'm very hopeful that we will. We're prepared to move forward when we do reach agreement on that.
Well, I appreciate most of your response there. I do want to discuss one aspect more of Basel before we move on to another topic. I find it very concerning with how much of this proposal, this process, appears to have been done behind closed doors. The Fed, the FDIC, OCC proposed the Basel III endgame last July. Then in October, the Fed began the collection of data to conduct a quantitative impact study on the cost of Basel III proposal, a study which I will note should have been conducted before any proposal was ever issued. Move forward to January of this year, Vice Chair Barr committed to a public comment period once results of the study were published. We are still waiting to view the results. Keep in mind, all the while, we're hearing rumors that the Fed is working on revising its proposal and moving towards an updated version. Please help me understand, how will the Fed revise or reissue a capital proposal before receiving public comments? Basically my question.
Well, as you know, we have received extensive public comments, and we've also evaluated the quantitative impact survey that you mentioned.
Yes.
And so the idea would be when we do reach agreement with the other agencies fully, that we would publish.
Oh, I see. What's wrong?
The proposed changes, and also the quantitative impact survey, and also the effects that the QIS suggests that the changes would have. So we'll put all that out for comment again for a period of time, and then having had yet another round of comment, and we can then move toward finalizing. That's basically the broad strokes of how I would see this moving forward.
And how long do you see that opportunity for public comments?
So it would be meaningful. I mean, it might be 60 days. We don't need to it doesn't need to be a long one. But, before we do that, there's a lot of work that needs to take place, before you actually put out the revised proposal. Quite a bit of work. So it will take some time, and then we would put it out, and then there would be, I'm just taking that number, 60 days of comment, and then we would get the comments back, and there would be another period of evaluating the comments, and only then would you go final. So there are a number of steps here.
Yeah, thank you. Well, just final point as I'm running out of time here. I think Senator Reid made the comment about the Chevron case and the impact that it could have, certainly curtailing, from my perspective, the regulatory state. The necessity of a cost-benefit analysis on new regulations that will impact the economy, I think, is quite helpful. In the 1,000+ pages of Basel III, I think there were about 20 pages that reflected some kind of cost-benefit analysis approach. I really hope that we see more of that going forward.
Thank you.
Let's see here.
Tester is recognized.
Well, I misunderstood your question earlier, Lucas. How do you feel about getting a degree in data science? I'm on the fence between that and computer science or physics. You had a computer science degree, not a data science degree. I am not aware of anywhere that is teaching a university that is teaching data science specifically. I think that probably 90% of the people that are data engineers got computer science degrees.
Correct in that. And I was wondering how the house.
So it's a new thing. I wouldn't be able to judge. What I would say is that data engineer appears to be one of the
A lot of attention
is likely to be the fastest growing segment in the computer space.
Issues in the country, and we had them before the pandemic. Certainly, the pandemic has created new distortions, and monetary policy works through interest-sensitive spending. There is no more interest-sensitive spending than buying a house and having a mortgage. So, for sure, our tighter policy is having an effect on economic activity in the housing sector. But I would also say the best thing we can do for housing is to succeed in getting inflation down to 2% on a sustainable basis, so that rates can come down, so that the housing market can get back to what was the pre-pandemic normal, which is to say still a housing shortage, but not dealing with the kinds of specific things we're dealing with now.
So let me drill down a little bit. I'm speaking not necessarily from a housing cost interest, and you're correct on the things you just brought up. I'm speaking more from a standpoint of economic growth, and that there are plenty of small businesses, schools, hospitals, Main Street businesses that can't hire people, they can't expand because there simply is no place for them to live. How does that fit into your economic outlook metrics? Because I think it's, from my perspective at least, I think it's limiting the opportunity for expansion. It's limiting the opportunity for entrepreneurs, business startups. And does that fit into the economic picture that you look at?
So our mandate is for stable prices and maximum employment. And again, I think for housing supply, the best thing we can do is get inflation under control so that rates can come back down, so that we can have a more normalized set of rates and a more normalized housing system. But I think policies to increase housing supply are really not so much in the hands of the Fed, they're in the hands of legislatures, state and federal.
Do you believe that if we were to put forth some
like that.
Housing incentives, whatever they may be, that could have if those incentives resulted in more affordable workforce housing on the market, that would have positive impacts on the economy?
These are questions for you, but I would say this, that I'm aware that housing is in short supply, and that for many it's a critical need for the workforce, and so more of it is better. But as to where the fiscal policy how you should prioritize that's not up to us.
Look, I want to talk about the independence of the Fed for a second, because I know that you are a strong supporter of independence, as am I, and political influence I don't think helps with monetary policy in the country, and so give me your perspective at least on why the central bank independence is so critically important.
Thank you. I'd be glad to. So essentially all advanced economies have adopted a policy of central bank and operational independence, and that just means that we make our decisions, we're instructed to make them without taking in extraneous factors, one of which would be politics. And the record is pretty clear that that's
Got 20 minutes left here. I'm not going to stay through the whole press conference, but this is going to be going all morning, so have fun with that.
We just want to stress, as we do periodically, that this is an institutional choice that we make as a country, and that as long as it's seen to serve the public well, it's a good choice. We think so.
Okay, on advanced economies, there's some that talk about the economy of this country not being in very good shape. From your perspective, tell me how the economy of this country is doing compared to other advanced economies that have central banks.
So I'm in lots and lots of international discussions as part of my job, and the story for the last 2 years has been just how exceptional the performance of the U.S. economy has been, and that's not a secret. Clearly the U.S. economy has performed very well compared to sort of our advanced economy colleagues.
Is there any country in the world with a central bank, any advanced economy that's performing better?
I see where I made my mistake.
No, any economy that's an advanced economy that has a central bank that performs better than us.
None comes to mind. As I think of the majors, the answer would be no.
Okay, thank you.
Thanks, Senator Tester. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. Mr. Chairman, first of all, thanks for coming in again and visiting with us. I just want to focus on two specific items, and I'm going to start with the Basel III Endgame discussion. I think Senator Scott did an excellent job of kind of laying out the concerns that many of us have had with it. I would like to go back into just one particular issue, which I think a lot of folks out there that follow this, and I know it's technical in nature, but let me just ask a specific question, and you can kind of pick it apart for me, please. Both you and Vice Chair Barr have confirmed that there will be material changes to every risk type outlined in the proposal. Since there will be significant changes, do you believe where the agencies have landed now would be considered a logical outgrowth of the original proposal from last summer?
For those people who are not familiar with, that's the legal test that turns out to be if it's a logical outgrowth. If it's not a logical outgrowth, that would legally require a reproposal. And I don't want to make the legal judgment. I will just say again, from my standpoint, My view and strongly held view of some of my colleagues on the board is that it will be appropriate for us to put out the changes again for a period of comment, just because it's the right thing to do. It's what we would do typically in a situation where there are, material changes to a proposed rule.
Do you feel that you have a consensus in the board to allow that to move forward in terms of an additional comment period?
Yes, but of course we have to get the FDIC and the OCC. We're in discussions with them to work on something that would meet that need, and we have to get their agreement too.
Assuming it sounds like that's the path that you would like to go down.
Yes.
If that were the case, would it be fair to say that we'd probably be looking at final determinations or recommendations for a Basel III endgame proposal probably into next year before it would become anything of a final determination?
I think that may be right. It's that something like that could be right. Yeah. I mean, it's you can't be. It's hard to be precise. We would put it out. It takes some time to write this stuff up. Then you put it out for comment. Then you get the comments. Then you read the comments. Then you write the final rule. Beginning part of next year is a good guesstimate.
The only reason why I push is because there are so many folks directly involved with this, and the impact on our economy here and with a lot of our financial institutions. This is a significant change, and it's one that a lot of people are following. So I'm trying to get you to.
It's been a moment since I've done a multi-series indicator, and there's all sorts of bizarre problems you can run into them with.
Visits about in front of this group before, but I want to talk about what the parts of inflation are and what parts you can control and what parts, as the Fed, you really can't control. The demand side of the equation on inflation is the part that you have the tools to work with. But there is the supply side of the equation, which is still out there. And I want to just lay this out because as we do this in this setting, it naturally becomes political in nature because one of the starting points that we talk about is when this administration took office and what happens with supply side issues at that time. And as I work my way through this, I just want to share the concern that I've got. And then
I got past it. Okay, I fixed that. I fixed that problem.
And then I want to talk about what you can control and what you can't control with regard to making changes on inflation through the processes that you have. When President Biden took office, gasoline prices, since President Biden took office, gasoline prices have risen over 54%. Energy prices have risen 41%. Fuel oil prices have risen 37%. Now, I can go on, but you understand what I'm saying is energy has increased substantially. And I think one of the reasons for this has been additional demand as we've come out of a pandemic. But the other part of this has been whether or not investors really want to go back in and invest in traditional energy resources after the president made the specific determination to cancel the Keystone XL pipeline on the day that he stepped into office. When he did that, he sent one heck of a message to investors about traditional energy and investing in traditional energy in the United States, and the fact that a multi-billion-dollar contract or contract could be canceled with the stroke of a pen. Now, my question to you is, what percent, or has there been a discussion about what percent or what amount of the inflation that we've seen, over 20% increase in terms of affordability for a lot of our products, how much of that is attributable to the demand side and how much of it really is attributable to supply side challenges that we've seen in this country?
That's a question that we've thought about a lot, and any attempt to reduce that to a precise number would be inappropriate because it's so uncertain. But I think we can say, I believe strongly, there's a significant demand element and there's a significant supply element. And we've seen the supply side heal so much over the course of the last year or so, and we clearly see that that's contributing to lower inflation. We also see cooling demand, for example, in the labor market. So the two forces are working together. I can't really break it down. It wouldn't be. It would be such an imprecise estimate.
Just simply an acknowledgement, though, that it is both demand.
It's both. It's definitely
and
both.
It is supply.
It is both. Yeah, for sure.
Thank you, Mr. Chairman. My time has expired.
Has risen by 0.5 percentage point over the past year. The number of job openings has dropped almost 50%. The hiring and quit rates are now below pre-pandemic levels. I'm concerned that if the Fed waits too long to lower rates, the Fed could undo the progress we've made on creating good paying jobs. Full employment is part of the mandate, as you say over and over. How are you assessing the risks of higher interest rates in the labor market?
So I completely agree with your characterization that the latest data do show that we've had considerable cooling in the labor market, and we're very much aware that we have two-sided risks now, as I mentioned earlier, and we're determined to balance those as best we can. We want to see more good inflation data, and we also want to continue to see a strong labor market. And those two things are equal under the law. We have this challenging thing to balance them, but we're very much conscious that that is our job, and we're trying to do that.
Well, and you know that if unemployment trends upward, you must act immediately to protect Americans' jobs. Workers have too much to lose if the Fed overshoots inflation target and causes a completely unnecessary recession. We will say that over and over and over again. I think you understand that. Housing, higher interest rates are making housing more affordable. Are supposed to lower cost, yet housing prices continue to soar. By keeping rates high, the Fed ignores the economic reality of the millions of Americans struggling to make ends meet and get ahead. Let me ask you 3 quick yes or no questions, if you would answer that way. Since late 2022, when the Fed began raising rates, has the volume of housing sales decreased?
I believe it has, yes.
Since late 2022, has the median home price increased?
I believe it has.
Since late 2022, have monthly mortgage payments become more affordable or less affordable for home buyers?
Less affordable.
Okay, thank you. In short, despite how
They're not asking the hard questions.
median
Okay.
price for a single home, single family,
It's all politics, dude. That's why I don't trade it.
people are spending a greater share of their income and mortgage payments.
The market reacts to it, even though it's really not something that it should react to.
Rates are not bringing down housing costs. The cost of home ownership is
So we have something where future orders are based on something entirely subjective and frankly a little bit silly.
people, including many
So I have no interest in playing that game.
money due to the bankruptcy of this fintech middleman. Reports indicate that as much as $95 million may have gone missing. The Fed oversees one of Synopsys' former partner banks, Evolve Bank and Trust. As a regulator, it's your job to make sure that banks protect the people whom they serve. What's the Fed doing to help customers who felt the impact by the Synopsys collapse? What are you doing to regain access to their money?
So we do supervise the bank. We don't supervise Synapse, or let alone the fintechs that feed into Synapse, and we're strongly encouraging Evolve
So the question is, would the market react and break higher? Yes.
to those depositors.
Dude,
Also, as you may know,
what kind of question is that? How long have you been doing this?
before this all happened,
Again.
we did an inspection or looked at Evolve, and we hit them with an enforcement action around these very risk management issues. Again, before the current situation developed.
Okay, it's critical that consumers are made whole as soon as possible.
Oh yeah, click the
We
video
will
back over.
continue to talk to you about that. We will watch. We will let you know we're watching. The Fed needs to use its supervisory authority to ensure that Evolve is committing the resources necessary to return those funds to the account holders. Last comment, I want to note one last thing. Last year's Fed report on the failure of Silicon Valley Bank noted how incentive-based compensation encouraged excessive risk-taking that led to the bank's failure. You either watched or had reports of when those bank CEOs testified in front of this committee. The report, the incentive-based compensation that led to the bank's failure, I mentioned, it said that SVB managers, quote, had a financial incentive to focus on short-term profit over sound risk management. That's what a number of us, Senator Smith, Senator Butler, Senator Warner and I have said over and over, that short-term profit over sound risk management causes significant problems to our financial system. Compensation practices still pose a threat to our banking system. I urge you to move quickly to join your colleagues in the long overdue rulemaking on executive compensation. I mean, you know.
Oh, gosh.
You read the reports at the outrage of the public about executive compensation continuing to go up and up and up and up. You have a role, a significant role, a legal role to deal with that. Thank you.
It's the wrong way to address it.
Senator Tillis is
Law.
recognized.
Thank you, Mr. Chairman. Thank you for being here. I want to be real quick on Basel III Endgame, and I want to be mindful of time. Just simply, can I get a commitment from you on releasing the results of the QIS?
Yeah, we plan to release the results of the QIS.
What time
not just, well, first we have to get agreement with the other banking agencies, but as soon as possible.
Can you imagine any agencies having a concern with, any other banking agencies having a concern with releasing it? Or is it just a matter of
Not at
pro
all.
forma? Okay.
No, it's just a matter of the bigger picture of getting agreement on the revisions to Basel III and also how to proceed.
That's great, and I really appreciate the feedback that I've received from you. I should have started by thanking you again for your continued accessibility and discussions outside of the committee. They're very productive.
Okay, so I think I may be running into
I grew up in the 70s. Got my Social Security number in 1973 when I was 12.
Am I running into a
payment? So I've been following
multi-threaded issue?
And that was a really lousy time to enter in the workforce. Tell me, and I'm hearing discussions among some of our members now that would almost be reminiscent of discussions with prior Fed members saying, look, we got to lower interest rates and we've got unemployment out of control. So it sounds like we're taking some suggestions from some of my colleagues or plays from a playbook that didn't prove to be very effective back in the 70s. What can we learn? I'm not going to ask you about where you go from here, but if we look back into a post-mortem on some of the decisions that were made when we had consistently high inflation, we had we had consistently high unemployment. What lessons can we learn there, or what mistakes should we not necessarily repeat?
Well, it's time for me.
This is a fingerprint of a challenge. It's not exactly like the stressors that we had back in the 70s, but what can we learn from the decisions, what I think are arguably the wrong decisions?
You know what, Lucas? You're an asshole and you're a fool if you think that you're going to make money trading this shit. And I'm absolutely stunned that you've been trading this long and you would be asking me questions about something that you've seen countless times before and should know better than to trade. It just boggles my mind. Like, I'm sitting here like, does he actually fucking watch? Does he actually do this? Or is this like the same person? Is there like multiple people inheriting the same person? Because we've been through this before. I just absolutely, like, I don't get it at all. It's crazy to me.
All the other things that happen. So I think we have to, each one of these.
You know the rules. If you're going to cite yourself as an authority, then you have to put up statements. So don't start that with me.
From the 2% target should be addressed now and not at a later time.
Absolutely.
I like that answer. I want to go to something different. I'm trying to go into a lightning round now and finish on time. We've seen the 2024 stress.
Let's review what happened.
U.S. banking system.
I said,
it looks
this is a dumb thing to trade. You've been trading for a long time. You should know better. You've certainly seen this event before.
Do you agree?
What's the deal? Why would you be asking this? And he just says, I've been long enough to be consistently risking money instead of just in micros. So he insulted me by saying, oh, well, I trade larger size than you, so I must know what I'm doing. So he cited himself as an authority, which everybody should know. Yeah, I was an asshole. Lucas, I'm an asshole. I'm a huge asshole. I don't give a fuck about what any of your guys' feelings are, what you think about me, what you think about anything. All I care about is getting as good at this as possible.
That is our obligation.
And I'm not going to sit and worry about what people's feelings are. I don't care. It's not pertinent to what I'm doing. I mean, I guess if I'm a streamer, and probably would be a good thing to make sure that people like me, but
the Federal Reserve,
you can only do so much, all right?
With the FDIC and the OCC to try to find a path to do that.
But it doesn't change the discussion here. Like, you can't just come in and say, oh, okay, well, yeah, I did say something stupid, but you're an asshole. Who fucking cares? Let's go back to the subject, which is you said something stupid.
is recognized.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you.
It is, in my opinion, stupid to try and trade during the testimony unless you're super fast or they really say something significant that's really going to continue to move the markets. But the time for that is past. So this is just a shit show.
And housing affordability.
You don't have any information that's going to predict future issues. Future orders. It's not worth trading.
Around a rate cut.
You've been around here for years and years and years and years. You've seen this event.
Add my 2 cents here.
Happens 2 times a year. You've seen it countless times, and I just can't imagine what would make you think that you would be able to trade it.
Again, we've discussed the rate
And don't tell me like, oh well, I've made money and I don't. No,
but I hope it's
like.
later.
How can you have been trading as long as you have and been making money as you claim and not know this?
But I do think the discount window proposal that I've got, that I know you're working on, before we think about additional regulations that we do need in some cases.
There he is. Powell is thinking the same thing he says all the time. Markets are chopping around. Might be an informed decision to fade the moves.
A lot of my colleagues.
I don't think so.
Quantitative easing, or
so especially here in the treasuries, number one, you're probably not going to get too much meaningful movement anymore. But number two, like,
again, Senator Tillis already raised, and
the market did move.
raised. I also
Come on.
questions I raised in my March letter to you was,
Were you able to predict that it was going to jump up here and then later it was going to fall down here and all that sort of stuff?
market risk.
Like what it's done
and I
is really kind of almost
revisions come out.
nonsensical as far as I'm
One of the
concerned.
things that this,
Like I don't think that there's really, at least right now, maybe at the end of the day I can kind of read around and kind of figure out what it was that they were reacting to. But
you may be all looking at revisions to liquidity standards as well, and we wanted to see what you could say about that and whether that
the entire and the entire basis of your idea is also dumb based on what we know. Okay, the impacts of large meta orders are permanent, so it doesn't matter if it moved up on something that's nonsensical. There's no guarantee that it's going to come back. That's completely up to what the future orders are, and right now the future orders are just noise.
Exponentially faster than prior runs. That's the new world.
So it's an incorrect theory about the market.
An estimate of what that world is baked into things like the liquidity coverage ratio, for example.
right, and wasn't that the case?
Well, you know what? The S&P 500, it moves up.
Every depository dollar
Tends to move up. I don't know.
no matter what the capital standards are. And one of the things
You have fun with that, but if you blow,
after SVB, that
they say something and it blows you out,
internet-driven,
don't come crying to me.
a lot of us raised
Anyways.
concerns.
I gotta get going. I will see you guys tomorrow. Stay excellent, team.
So whether it comes from you guys or from folks